A very good morning to my dear children. Today, in our online class, we shall continue with our lesson partnership. Since we are doing it after a long time, let us quickly revise what we did in our previous classes. Partnership basically is when two or more than two people voluntarily come together to form or to do a business so that profit and losses can be shared among them, then they form a partnership. Generally, there is an agreement between a partner. Agreement in commerce is called deed. Agreement states the terms and conditions among the partners, and it also states the rules and regulations made by the firm which are followed by the partners. There are two situations. One, when agreement or the deed is absent, and second, when the agreement or deed is present. When agreement or the deed is absent among partners, in that case, no interest on capital is given to any partner. Interest on drawing is also not given to any partner. Salary and commission to any partner is not given by the firm, irrespective of the work done by them. Profit losses are shared equally, irrespective of the capital contributed by them. And in case any partner has given loan to the firm other than capital, in that case only 6% rate of interest is given by firm to the partner annually. When deed is absent, we had done a question when deed is absent. We have to start with when deed is present. So today we shall cover that. When deed is present, then two accounts are prepared. First is profit loss appropriation account and second is partners capital account. When you did final accounts, you had made three accounts: trading account, profit loss account and balance sheet. In profit loss account, you had noted all the expenses of the firm on the debit side and all the income of the firm on credit side. Profit loss appropriation account is also extended form of profit loss account because in profit loss appropriation account we note down expenses and losses of the partners only. Expenses of the partners are noted on the debit side, whereas their income is noted on the credit side. After preparing profit loss appropriation account, partners capital account is made. This is the format of profit loss appropriation account. Profit loss appropriation account is basically a T-shape account where on the right hand side it is debit and on the left hand side it is credit. Then particulars amount is written on the first row. 4 columns are made. In the first column all the expenses are noted. Like for example, interest on capital given by the firm to the partner. Let's say for example there are two partners in the firm, namely A and B. So interest on capital account is written, then AB name is written, then उसके आगे उनका individual amount and बाहर इनका total. Let's say A को दिया 100 rupees and B को दिया 50. तो 150 will come outside in the amount column. Similarly, salary given by firm to the partner. Let's say A को दिया 20 and B को दिया 30. So 20-30 will be written in particulars column and 50 the total amount will be written in amount column. Same thing goes with commission. AB, let's say 10-10 है, तो 10-10 individually will go to particulars column, and 20, the total amount, will come in the amount column. Credit side is the income of the partners. Partners get income from the firm in the form of drawings. Sorry, I by mistake said that they get income. Actually, interest on drawing is expense for the partners, and all these are income of the partners from the firm. So debit side all the income of the partners, and credit side all the expenses of the partner which they have to pay to the firm. So on credit side, interest on drawing ए एंड बी की, अगर ए को देना है फर्म को मान लो 80 रुपीज़ एंड बी को देना है 70, तो 80 एंड 70 विल कम इन पर्टिकुलर्स कॉलम, एंड टोटल दैट इज 150 विल कम इन द अमाउंट कॉलम. But before recording these transactions, that is interest on capital, salary, commission, interest on drawings, profit from PL account will be brought down in profit loss appropriation account, which comes here on the credit side. Just in case if there is loss in profit loss account, it will come on the debit side of profit loss appropriation account. After noting all these entry, that is loss, capital, salary, commission, profit, interest on drawing, total of debit side and total of credit side is done. The difference between the two, whichever side is short or whichever side has less amount, the difference between the debit and credit will come on that side. If this debit side is less, then the difference will come on the debit side under the heading Partners Capital Account AB, and the difference will be distributed among the partners in the ratio mentioned in the question. If the difference comes on credit side, it will again come under the heading Partners Capital Account and will be distributed between the partners in the ratio given or mentioned in the question. After preparing profit loss appropriation account, the next step you have to take is to make partners capital account. But there are two chances or two options. You may be asked either to make partners fixed capital account, or you may be asked to prepare partners fluctuating capital account. When partners fixed capital account is made, you have to make two account, one capital account and the other one current account. In capital account, you have to brought down the capital balance of the partner, which will be shown in the previous year's balance sheet, and this balance sheet will be given to you in the question. Then on the credit side, you have to add or you have to credit any additional capital brought in by any or both the partners. In case the partners have withdrawn any amount from the capital which they have brought, then it will be shown on the debit side under the heading to cash. And again you have to close this account. Closing of account means totaling of debit column and totaling of credit column. Whichever side is less, difference of debit and credit will come to that side. For example, if in this, let's total AB, if it is coming 200, let's say for example it's coming 200 and here it is 50 rupees. So 200 minus 50, here two balance brought down will be as shown as 150. After making capital account, the next account you have to make is current account. Here again it starts with buy balance carried down. This carried down amount will be given to you in the question under balance sheet on the credit side under the heading of partners current account balances. Then all the entries which you have made in profit loss appropriation account, that is interest on capital, salary, commission, these three will come on the credit side of partner current account. See, interest on capital account, salary, commission. Then PL Appro में there was interest on drawing. This interest on drawing will come to the debit side of current account, plus if the partners has withdrawn any amount, this drawings will also come under debit side. So first drawings, then interest on drawings, and the difference, that is the difference of PL appropriation here, this partners capital account, the balance means this again will be transferred to current account, either on the debit side or on the credit side, and then you have to close the account. Closing of the account is done in the similar way. Total of debit, total of credit. Whichever side is less, difference will come there. So in case if difference comes on debit side, so you will write to balance brought down, and in case if difference comes on credit side, the difference will be written as by balance brought down. And this difference will be shown in balance sheet under partners capital or current account. Now the second method is partners, you have to make partners fluctuating capital account. Under this you have to make only one account, which is partner capital account. This is basically clubbing of these two. By balance brought down, carried on, interest on capital, salary, commission, PL appro का profit, and इधर की तरफ drawings, interest on drawing, PL appropriation का loss. Then you have to close this account, done in the similar way as I told you earlier, and difference will be shown either on debit side or on credit side under the heading to balance brought down, to balance by balance brought down, and this difference will go under the heading will go in balance sheet under the heading partners capital account on the credit side of balance sheet. I had given you notes earlier on WhatsApp. Hope you have copied them in your register, and hope you have understood today's lecture. Tomorrow I will solve a question based on profit loss appropriation account and partners capital account to make you understand better. And I will at the end of and in tomorrow's online class, at the end I will give you one question for practice. Do practice it and revise what I have taught you today. Thank you.